In the currency quadrant today, taking a look at the March euro currency future, which got down about 29 basis points on the low today at 118.70, but capped a two-day rally by closing back above 119.20 even. It was 119.27.5, which was up about 21 basis points. The high was 119.28.5. That was up about 23 basis points. Now, why does it matter that we closed back above that 119 level? Well, when we first closed below 119 on Monday of this week, it was the first time since November 24th of last year that we had been below 119. And in November of last year, that 119 level was the breakout that took us to recent highs above 123 in January. So it was a very critical breakout level, not just the fact that it's an even number, which tends to matter at least for active investors, those round numbers, they really like targeting those. So getting back above there shows a little bit more strength than it would if we just had two simple two-day rallies, with the last one finishing up a little bit less than 0.25%. So being above that 119 level, you're going to want to watch that, because if we're going to break down in the euro, we're going to be retesting it and falling below it in the next few days. And there's some triggers that could make us do that. First of all, yesterday, we had the EU GDP figures. Now, that was the third estimate of Q4 EU GDP, and it came in mixed. The quarter-over-quarter number was down 0.7%. It was expected at down 0.6%. So that was a little bit of a disappointment, especially since last was up 12.5%. They were looking for it to be negative, but it came out a little bit more negative. But when you looked at the year-over-year estimate for Q4, it was down 4.9%. It was expected at down 5%, and the last down 4.2%. So that whole piece of the set of data was mixed, but at least it came out a little bit better than expected. Normally you would see some weakness off of that, but instead we got a little bit of a rally. Now we'll see if that strength that we saw over the last 2 days continues, considering that we've got an ECB meeting tomorrow. And given rising yields, the ECB may actually look to shift their PEPP plan at their meeting tomorrow. That's the Pandemic Emergency Purchasing Program, which allows them to buy assets to kind of keep their yield curve in order. And those rising yields are not really desirable at this stage for the European Union, given how much slower they've been at vaccine distribution and how much worse their data has been, at least from an ISM perspective and a PMI perspective, versus other countries like the UK and like the US. Canada actually just increased asset purchases at their central bank meeting earlier today. So we're going to be looking closely at that ECB meeting tomorrow.